Hello friends, I hope all of you are doing well and good. I welcome you on my YouTube channel in insurance. First of all, I request you to kindly subscribe my YouTube channel and press the bell icon button to get latest new uploaded videos on my channel directly to you. So let's start my today video on my YouTube channel in insurance. My today video is going to about climate change and US property insurance. So let's have detailed overview on climate change and United States property insurance. So American homeowners already coping with extreme weather now face a new risk. Disappearing property insurance, private companies have increasingly reduced coverage, calculating that the risks and potential losses threatened by climate change outweigh probable profits. As of now, this primarily affects a handful of coastal US states, including California. In other states, insurers have substantially increased the price of property insurance. So, investing in housing is how many Americans build wealth with owner occupied homes, according for around a quarter of households' net worth. But homes that carry high insurance costs can sell for lower prices, and when insurance costs come too high, homeowners may decide not to spend on insurance, making them vulnerable to major economic loss in the wake of a disaster. Homeowners insurance does not reduce the physical losses caused by catastrophic events. Insurance does, however, better manage financial and economic losses, allowing the large one-off costs from disaster to be spread across smaller annual premium payments. It helps reduce the broader economic fallout from disasters by helping people, businesses, and communities recover faster. The current trend of shrinking property insurance availability and affordability has profound implications for the economy at large, as spending non housing, including construction and services, accounts for about 17% of US gross domestic product GDP. So, more than 65% of Americans own their own home. For many, their home is the most valuable asset they own. Property insurance protects the home against catastrophic damage, including from natural disasters. Insurance also protects mortgage lenders, ensuring they get repaid if the resident is harmed. According to a recent Insurance Information Institute survey, 88% of US homeowners buy property insurance. So, private insurance companies charge premiums that put a price on risk. The higher the risk to a property, the higher premium. If the risk grows too large, insurance companies can decline to write a policy altogether, or they can seek to raise the premium. So, historically, insurers look to past events to determine the risk of future damage occurring. Climate change, however, has brought new, unfamiliar extremes, longer hot waves that kind metal, sea level rise in the overtops, sea walls to flood homes, higher winds that shred rooftops, deeper drought that buckles asphalt driveways, and wildfires that obliterate whole communities in myriads. So in 2022, extreme weather damages totaled over $165 billion. The reinsurer Swiss re-estimates that by 2050, under a scenario in which the global average temperature only increases by 2 centigrade above pre-industrial levels, US GDP could drop by close to 7%. The White House Office of Management and Budget assessed that climate change could reduce the US GDP by as much as 10% by 2100. It also estimates that world GDP could drop by 14% if nations contain heating to a 2.6% increase, which is within the range of what current policies would lead to, or 11% if further mitigating actions are taken to limit heating to 2%. These new extremes pose significant risk to property for insurance companies looking to the past to set premium prices could result in losses according to the actuarial firm Milliman. California's unprecedented wildfires in 2017 and 18, likely fueled by climate change, wiped out 25 years worth of profits for insurance companies in that state globally. Just 3 years, 2016 to 18, caused more than 70% of insured losses from wildfires for the period between 1980 and 2018. So, Houston offers a troubling look at what shifting circumstances could mean when Hurricane Harvey dumped approximately 4 feet of rain on the Houston area in 2017. 8 out of the 10 homeowners whose properties flooded did not have flood insurance. Their home flooded even though many sat outside the areas historically deemed most at risk. But climate change alters food risk, flood risk, with every additional degree of heat leading to a 4% more moisture in the atmosphere. Recent modeling estimates that the likelihood of Houston's 1 in 100 year weather event has increased by 335%, making these storms in 123-year event. So, how are insurers responding? In the effect of the growing climate risk, private insurance companies have recessed. Some insurers have sought to raise prices on premiums, reducing insurance affordability for homeowners. According to the California Department of Insurance, climate worsened wildfires have spurred insurers to seek rate increases amounting to $8.5 billion since 2015. Since January 2022, 31 states have witnessed double-digit rate increase. 6 states saw increase of 20 to 30%. So, home insurance prices are rising rapidly according to climate change. Other insurance companies have simply declined to offer insurance. The two largest homeowners insurance companies in the United States, State Farm and Allstate, announced earlier this year that they would take a break from issuing new policies in California. Farmers Insurance has also decided to cap new policies in California. American International Group AIG has reportedly reduced property insurance coverage to homes along the East Coast at risk of flooding and those in the western United States at risk of burning. Insurance and increased hurricane losses and litigation costs in Florida have driven close to a dozen insurance companies to go bankrupt, while other insurers, including Farmers and AAA, restrict coverage in Louisiana. Insurance companies have declined to write policies in hurricane-prone areas. So, friends, when property insurance becomes unavailable or too costly, some homeowners choose to go without. That means they bear the entire loss should disaster strike unless government or philanthropic aid materializes. If the damage makes their home uninhabitable, families move away in search of housing. The flight of families can cause schools to close and businesses to shutter, creating a downward economic plunge that starves local government of needed tax revenues. When it comes time to sell homes, high-priced insurance or the inability to obtain property insurance could depress the price of the home. So friends, this was my today video on my YouTube channel insurance, which is about to climate change and US property insurance. So I hope all of you now have a well idea of United States insurance and insurance companies and conditions of climate change. So I request you to please like, comment and share this video, and also don't forget to subscribe my YouTube channel Insurance. So friends, we will meet soon in my next video on my channel. So till then, kindly take care and have good day.